Hey guys, so I told you this year I was going to focus more on interviewing people that are actually in the investment business, hedge fund managers, investment bankers, guys that you wouldn't normally have access to as retail traders. And I want to give you guys access. So I set up an interview with a friend of mine, Maj Souedian, who went to Temple, manages a hedge fund now, but also was featured in this documentary called The China Hustle, which basically there's all these Chinese companies listing on U.S. exchanges that would acquire other U.S. companies that were like shell companies, and they would basically lie about the amount of money that they were making in China, and they were able to list on the U.S. exchanges because they owned U.S. companies. So he was one of the people in this documentary that actually uncovered it all. Him and his equity research team, Geo Investing.
After the mortgage crisis in '08,
everybody's looking to get their money back. China's this exploding market.
It blew my mind.
Let's invest in it now.
Everybody thought, I want to be a part of the China growth story.
We're making a profit. $22 million, $100 million,
$20 billion.
$50 billion.
This was simply too good to be true.
And it was.
There are no good guys in this story, including me.
Over 300 businesses operating in China, listed here in the United States.
Public traded stock. It was legit.
But I believed they're misrepresenting and doing less business than they had claimed. So we went to China to monitor one of these companies.
Roads in poor shape.
Garbage, rotting.
A busload of investors shows up. All of a sudden, things get turned on. They leave. All the lights go back off.
It's a $150 million company.
It's a total fraud.
If this one company is so brazenly fraudulent,
we have to worry about all of them here in the United States.
this is the largest financial crime of the last 25 years.
We've never seen a credit buildup that hasn't been followed by a major financial crisis.
Hold on to your wallet.
The government knows what's happening.
So I think a lot of people don't even know this really happened. Anyone I talk to, anyone involved in the stock market doesn't even know. A lot of people don't know.
It's a very frustrating thing. Mm-hmm. And I just don't want to hear how the world works anymore.
One of the things we did, so when we were on the ground in China, of course we would visit these so-called facilities because a lot of these frauds were brick and mortar companies.
Yeah. Yep.
You visit them. You count trucks. You could talk to employees, shopkeepers. You could talk to neighboring employees. So really good interviews. You could film things. But there was also, there's also these filings in China, financial filings, CIC filings.
So let's get this interview started, guys. This is going to be awesome. And if you have any questions afterwards to ask Maj, I'm sure we're going to set up another interview. So let's get this interview started. So I just want to start off by telling people a little bit more about what you were doing and the documentary itself. So you guys are obviously looking at companies in China, very small size companies that were listing on the U.S. exchanges and sort of lying about their financials. Nobody was really policing them is what you guys discovered. And I just wanted to start off by asking, what level of analysis did it take in order to discover the truth? Because obviously you couldn't look at their numbers and their financials.
There's varying degrees of complexity. And hey, thanks, Chris, for having me here today. Man, it was a great meeting. I was at least 5 years ago.
Yeah,
right?
yeah.
And I think Scott St. John was the guy my friend who introduced us. And I go, all of a sudden you show up at my house one day with Scott. I'm like, who's this guy?
Yeah, we just start talking about stocks, and you guys had the bachelor pad set up in Florida. Pretty sweet.
I remember talking to you, and this guy definitely knows what he's doing. And has a lot of potential in this business, and it's great to see you pursuing that dream. But no, so just to be clear, I've been a full-time investor for almost 30 years now, and I think maybe as early as 2003, 2004, a lot of China companies were coming to the U.S. and listing their stocks on their companies on our exchanges here, and some of them were coming to IPO, but a lot of them were coming through this reverse merger process, which is a backdoor approach to go public in the U.S. And you would do that by going on the OTC or bulletin board and the pink sheets and buying some shell and listing your company in the U.S. without having to pay a lot of as high auditing fees and other legal fees that you have to pay if you went for an IPO.
A Chinese company looking for a way into American exchanges merges with the shell of a defunct U.S. company that no longer operates, but still legally exists and has a listing on a U.S. stock exchange. The Chinese company then takes the shell company's place in the market.
Dan David, who's my partner in geoinvesting, and he's in the movie The China Hustle. He's the orator. He says, yeah, we went to China to prove them wrong, to prove all the short sellers wrong. We thought that we would go there and we said they would not. These companies are real. He's like, you know what? Send me to China. And what's cool about that, at that time we already had like an on the ground team in China getting ready to deploy. So it was all perfect scenario. And I said, okay, I'll send you there. So we sent him to China with about 50 companies. And I believe this was in early July, or maybe sometime in late June. And he gets there. In about 10 days, he calls me. He said, they're all frauds. I forgot who I was talking to, an individual who works in maybe an analyst, a veteran analyst. And he was amazed at how many of the young analysts coming to work with him had no idea of the China fraud game, and who had no idea of some of the tools that were used to expose fraud back then. So, for example, one of the things we did, so when we were on the ground in China, of course, we would visit these so-called facilities because a lot of these frauds were brick and mortar companies.
Yeah. Yep.
You visit them. You count trucks. You could talk to employees, shopkeepers. You could talk to neighboring employees. So really get good interviews. You could film things. But there was also there's also these filings in China, financial filings, CIC filings, where a company in China that has to basically file these filings with each province it does business in, and they have numbers in their revenue, some legal information regarding ownership structure of companies. So that was interesting. So we would look at those filings,
and you could just go access those like at any time.
It was easier that it was easier than it is now.
So now they know, and they're they've blocked it off a little bit.
But you can compare the financial filings in China on these things, right, to the SEC filings. And wow, they were different.
Right.
So
sometimes they were caught like right then and there in their own, in their own lie.
Yeah. Pretty
much.
But the U.S. and people in the U.S. they didn't believe it. Even the analysts were fighting it. The investment banking, you guys are wrong because they have different accounting standards than you do here in the U.S. So no.
Especially, of course, the investment banks are fighting it, right?
Sure. Well, the thing is,
they're the ones making money from that.
So we went to the investment banks. We took them our evidence. We said, look what we found. If you hire us and our team of due diligence, you'll have a better product to sell to the American people. They said, get out of here. You're telling us to pay you not to collect 10% fees on every transaction done through this bank. The less we know, the better. And by the way, if you tell anybody what you found, we'll sue you. Go back to Skip Back. So we went back to Skip Back. We published our research.
The IR firms, the investment banks, and the lawyers, and the auditors, they all benefit. If 80% of that universe is fraudulent, it's not worth it for them anymore. And they hide behind it. They would hide behind, in my opinion at least, hiding behind disclosures, not willing to work with us to do more due diligence. We actually wanted to work with these IR firms, and we call them fee collectors. We'll go in here, we'll vet these companies for you before you bring them here in the U.S.
Right.
Or if you are representing them, we'll tell you if they're not kosher, so you can at least, maybe address our concerns with those management teams, or maybe drop them as clients, because you're basically selling this poison to U.S. investors.
And then you had to realize that they not only know like this is their hustle, not just China's hustle. This is also the hustle.
That's what you're putting. It's more than it's really more than it's not just China. We tend to blame China and these executives, but we're as culpable here in the U.S. than anything. Investors craved it, and the investment banks, made the money from it, and the IR firms made the money from it. Everybody was making money off this whole thing to some degree until it all ended. But we're greedy here in the U.S. and we let it happen too, and we're still letting it happen right now. It's just between 2010 and 2014, it was this interesting time period where it was a lot of low-hanging fraud. a lot of companies that were exposed. Like eventually, finally, we got into it in angel investing. We exposed I think 12 or 13 companies were delisted or halted as a direct result of our research. We actually
That's awesome.
We played our part, and then the regulators were very active in terms of halting these companies and deregistering and delisting these companies from trading. But then it got really quiet for a while. It got quiet 14, 16, 17. There wasn't much going on. The reverse merger kind of train stopped.
Mm-hmm.
So, but now it's back again. I mean, there's we're seeing an incredible amount of fraud pipeline in these China companies. Now they're coming here in the IPO process.
Right. And they're bigger companies, right? Like now you have huge, companies that go public and then they, have this ADR and it's like.
They claim they're big.
Mm-hmm.
You have the same problems that were happening back then where, lying by financials, related party transactions, not having the proper licenses to operate in China, and a lot of this stuff is really easy to find. And for some reason, these investment banks are supposed to take a click. There's some due diligence that's so easy to find.
Right.
That it's hard to believe that these
too much money for them to be made by not solving that problem, for them. Because, I think when you look at investment banks and you look at how a lot of people profited, they're always just looking for the next scam or the next, way to, that's not every dollar that they make, but I think that there's a lot of money that's being made at all times in an investment bank through some method of fraud that, wouldn't be represented very well over the long period of time after people learn what's actually going on. And I'm not saying that every investment bank is committing fraud, but I think that
I think that there's different quality banks across the whole spectrum.
Yeah.
But I can tell you that every tier, top tier to low tier investment bank, top tier to low tier auditor, legal teams, firms, they've all touched this fraud to some degree. Whether I wish they would do a better job at any companies, but it's not just China. I think the whole system right now really is kind of a little bit broken in terms of the new company listing.
Yeah.
scenario.
Oh my gosh, these IPOs right now.
The Reg A Plus is a total disaster. It's actually like an F. That the way all those companies going public through Reg A Plus, it's a total disaster. The quality of companies going public in the U.S. just across the board is pretty bad, which again is why I think part of the reason why a lot of these China companies are able to continue to list here is because they still look like they have great stories on paper.
Right.
And it's a lot of fees, and the exchanges benefit from having them list here as the investment banks and IR firms.
China, they're all state-owned companies too, so that's got to also play a factor. China doesn't want to solve that problem; they're benefiting from that.
Sure, just take our money.
Exactly.
So it's interesting, but look, it's not just China. There's a ton of pump and dumps going on right now on U.S. names. There's a lot of tough, murky waters to navigate right now.
Mm-hmm.
I haven't seen this bad in a long time. The pump and dump game in general which used to be often reserved for just OTC companies. It had and companies not on major exchanges. Now it's graduated to where it's definitely on the NASDAQ. And
100%.
Really bad, and just like the game is ridiculous. So it creates a lot of opportunity for our firm, because we didn't just do China. We're known for China in the short game. But we also exposed 22 pump and dump U.S. stocks that we've written articles on. So, and we've written reports on U.S. companies.
So is your method usually very similar to what you did with a lot of these Chinese companies, where you actually go speak with the management, you actually set up cameras or something like that, or is it more just taking at face value a lot of the information that they give you and trying to just interpret that? Because I thought that was always a tough game to play. Because it's just like you can never trust anything that a small company, I think below 400 million, puts out. I just think it's like.
Well, I think you can. But you have to do your homework. Now, there's certain, you had the China short game, you had the pump and dump short game, and you have the regular U.S. that looks the U.S. solid U.S. companies are become shorts. So they all have their different way of analysis. They have pump and dump. The U.S. pump and dump thing, is pretty. It's for me, it's the easiest type of fraud to find or misrepresentation to find.
Right, because it's not as hard to uncover
the
real information.
It's really the same characters that just keep doing pump and dump schemes. They rinse and repeat. And it's this interesting pool of fraudsters that keep doing it over and over again.
Right.
But then you have, and then you have the U.S. China side, which you have to do on the ground due diligence, get the filings. You're in China, read the filings in the U.S. to figure things out. But then you have these, top tier U.S. names, where that becomes very, more challenging to uncover that fraud. A lot of that's accounting, very.
They actually know what they're doing, when it comes to like hiding the books and putting it on these different layers.
Well, sophisticated accounting fraud. They've been vetted by investment banks and analysts, so it's a tougher thing, but that becomes a little more difficult. But we've done the whole gamut. So,
right.
I think for the retail investor, it's every pocket really is challenging because shorting isn't just about finding a company that you think is not legitimate necessarily. It's just you may have to be right. You can either. If you have a high conviction short and you want to short that stock, it might take you a while to realize that to be proven right, and the whole time you're paying interest on your borrow. There's volatility. You might have a stock pump and get called away from you.
Getting borrows, in the first place, can be difficult too if you don't have a prime.
That's why it's pretty. If you're going to short, you should listen to follow Muddy Waters, follow these, follow Geo Investing.
Mm-hmm.
Citron, all these guys, and that are maybe some. And actually, there's some really interesting. White Diamond is an interesting research outfit now. Follow these new up and coming research outfits. Citron and Muddy Waters, right to report, stocks gonna fall apart right away.
Exactly.
So,
Andrew Left has been proven right a lot.
I like to follow these smaller people on Twitter maybe, or Seeking Alpha if you can find some that have some interesting reputation.
I want to switch up real quick and ask some more questions just kind of generally around starting off and, scaling throughout the investment business, and then kind of get that into other questions that I have as well. I think the biggest thing is, how did you start off in investing and kind of what made you want to do what you're doing now? And then I guess where do you see it going next?
All right, well, look, I think I read when I was in college, I think I was 18 or 19, the book called One Up on Wall Street by Peter Lynch. Prior to that, I had some exposure from my dad. I used to watch my dad kind of dabble in the stock market, and he actually is still investing in it today. And I remember actually when he had told me about this artistic greeting stock, and the symbol was ARTG. Actually, it was. They were a greeting card company. I decided, I'm going to go work at a greeting card company in a warehouse, check it out, see what's going on in the business. Because I just read Peter Lynch's book,
Yeah, I'm just interested in
it. Let me go and figure out the industry a little bit. So that was interesting, and I started finding it fascinating that you could find these small companies and have access to management and talk to them and talk to the CEOs, learn about these companies, and I really like that a lot. So it really just kind of connected with me. And for a long time, I just followed Peter Lynch's blueprint to investing, and he had a checklist of what to look like, what to look for in the financials.
And that was that was the first book that you ever read in investing?
Yeah, it was really besides being in school and reading,
That's awesome, man. So you had like a solid fundamental foundation to start with. It wasn't like, Joe Schmo teaching some, because I think a lot of people, they learn from people that have no clue what they're talking about, and it kind of damages their path in investing or the stock market if they don't get, a real solid foundation starting off with.
But I think it's all about, understanding how to organize your research, make it efficient, where to find your research. When I was in school and college, I wasn't finding that my investment classes were teaching me how to pick stocks.
Oh no!
They get all this theory, but the Peter Lynch's book really put it all in perspective for me. And I spent a lot of my time, I'm not condoning this, but not going to my classes as much and going more to the library and doing my stock research and stuff to learn really how to do it. And but yeah, I mean, look, if you have some basic understanding, but yeah, if you have too much of understanding of theory, that can be detrimental to you also. I have this saying, at some point you gotta stop collecting books, start collecting experience.
Exactly. Yeah.
And so if there's 3 books I would recommend for a young investor, be the Peter Lynch book, One Up on Wall Street. Jim Collins has a book called Good to Great, and Peter Thiel.
Yeah, great book.
Has I guess is a 0 to 1. I guess
0 to 1. Yeah, I love that.
So those three books there really are interesting. Really, Peter Lynch gives you a great solid foundation of how to make your investment process. Good to Great helps you understand management teams. 0 to 1 really helps you understand what makes some companies special.
Yeah, monopoly dominating a segment of a market, and
The 3 books that really have helped me along the way.
So where you went to school for finance, or did you go to school for something else and just kind of throughout were really interested in finance and took business classes?
Yeah, it was finance, risk management. I can't say that shaped a lot of my investment theory today, but that was what I went in there for.
Mm-hmm.
But I think that I look back at it and it was useful. I mean, I'm not one of those guys who say college is not useful. I mean, it taught me a lot of discipline. I wasn't the most disciplined kid, and it definitely taught me about discipline and getting into routines and things like that. So I appreciated that. But I think most of my was my dad and Peter Lynch and doing the research, calling management teams was really the big part of what made me love the game and get better at it.
Yeah, and then being able to structure your own research process and learning how when you implement some of the stuff, but do it in your own way. I think it's so much fun just seeing it actually play out. And even if you're wrong, you have something to say. I actually did something with the with the information I have or with the passion that I have. I actually put my thoughts on paper and publish that to other people. That's a big. I think even if it's a waste of time, it's never really a waste of time.
Right. Yeah. And at GeoInvesting, we're out. We put our reputation online. We write these articles. We have a premium membership.
When you actually write a research report, I guess what are the main elements that come together for you that are really important in a report, or is it more like news and sort of like a watch list of stocks?
We have different ways of bringing our research to our members. We have a morning email every morning, which kind of talks about the stocks are coming into our pipeline. I basically, or if I went to an investment conference, I talk about some of the companies I met maybe at that conference. I talk about the best reports, the earnings reports we saw in the morning. And so we just basically give our members, it's like a page or two of just really briefing what's going on in our life at GeoInvesting as we find these companies. We let our members know, hey, maybe we're buying or selling the stock, whatever. Or here's a research report we're working on. Then we have this probably called Reasons for Tracking, which is a shorter piece, which is, here's 5 quick reasons why we like a stock maybe, or we're just watching it if we don't like it, maybe for future.
Then do you also do DCF models and stuff like that, or you just try and keep it as kind of simple and to the point as you can, or is it a lot of models and things of that sort?
It depends. So the reason for tracking is very short. Then we have the full-blown research articles, which can get more in depth. But I like to keep everything as simple as I can. So if there's a need to show a model, we'll do it sometimes. But we don't like to complicate it.
Right.
We have done DCF models and done deep industry analysis. But sometimes if I can tell a story in a few pages, it's better. 2, 3, 4 pages, you get the point across. Remember this. The longer it takes to write an article, all these ideas what we're missing. I love to do research, and so the thing with GeoInvesting, we have to write articles, of course, because our members deserve that. But I need to balance being able to bring fresh ideas in. So I'd rather spend a lot of my time, of our research time of our staff, really bringing in a nice idea pipeline.
Right.
So
and I think that a lot of times when people put out research, like say an investment bank, they want to put out a 10-page research report to, number one, sell whatever it is that that product is often, if they're a part in, of course they're not going to say that, but indirectly they kind of are. And also they want to sell themselves as being smart. So it's like a lot of times they put in stuff that to me isn't as valuable as an investor. So I don't think you always need a 10-page paper on a company. Sometimes all you need exactly is maybe 3 pages or 2 pages or whatever.
What we try and do too is like the first paragraph of our reports, we like to give the whole essence of it. So even if we have a 10-page report, you're going to know, like in that first 2 paragraphs, the elevator pitch of why we like a company or why we're watching a company.
That's awesome, man. We
do have we have like a really deep team here, by the way. We have like maybe 11 people networking. So we have a deep team. But it's always great to source ideas from people we trust.
Right.
Whether it's outside geo-investing in our network or within our geo-investing network. Because I've been doing this for so long, I've interviewed management teams from years ago.
Right.
I know if they're spinning a positive story today, and they did that 10 years ago, it didn't work, and they've been doing it for, so it's an interesting kind of accumulation of a mental journal.
One thing I want to ask you is, like, when you're looking at a management team and you're interviewing them, for somebody who knows nothing about really interviewing management teams and really doing real fundamental analysis, what types of questions do you think are important to ask? And also, like, I know it's a much deeper game than just, hey, whatever they're saying, trying to take that for face value. You also want to see how they're saying it, the mannerisms, the psychology that they have behind everything that they do. So, like, give me some guidance as far as what we should look for there.
Yeah, so each company is going to always be different, right? So there's a few important parts of the interview process for a young investor that I don't part upon when they're getting involved in this game, or even an older investor who is getting into the game for the first time. Is be prepared. So before you call a company, understand what they do.
Right.
And when you get good at this, you can prepare for initial interview relatively quickly, within a half hour, 40 minutes. For the first initial interview. And so, read the SEC filings, read the press releases, and read the conference call transcripts to start getting an idea of the questions you want to ask. And I think that, that could be a bigger conversation one day, like how to go through a company. We can talk about how we get questions. But some of the broader concepts are this. Management is so important, understanding management. So the first question I always ask a company, I'm about the I want to know in the first interview more about the qualitative than I do the quantitative.
Right.
I want to understand what drives management, what motivates them, and just the business in general, how it works. And then eventually the number of questions will come. But really, the first question that I take up every interview is, Mr. or Mrs. CEO, I want you to please go through a scenario, maybe even before you join this company. Show me how you attack challenges that you met. I want to know how you got through bad times in your life, whether it's before this company, during this company, and how you solved the problem and how you came out of it succeeding. Because I want to make sure that the jockey that's driving riding this horse, right, is really qualified to lead shareholders, and as a steward of my money. And if they've done it before, I have more confidence that they can do it again in the future. And and that's really, really, really important. And then it just it's basically like letting the CEO talk, letting them and I think
open-ended questions I'm sure are very important too. Asking stuff that's not as yes and no but open-ended. Is that important?
Yeah. And if you ask good questions, they start to appreciate that. Then, wow, this person really does research. I really appreciate that. And and it's really important to find management teams that treat a shareholder who owns one share as important as one who owns maybe 100,000 shares.
Right.
I love those teams. And so really more than ever right now, because the market's volatile, because there's so much pump and dump, there's much fraud, you really want to see if you can really understand management and that you have confidence in the management team.
Right.
So really, I can't stress that enough. And then from there we go down. Depending on the company, we talk about what are the different factors that can affect revenue. One of my favorite questions is what are some of the things that make you not sleep at night? What worries you the most as a CEO? And that's really important to me. How do you treat your employees? That's really important to me. I mean, how do you motivate your employees? How do they feel about you? Things like that. These are all qualitative factors. And then we can, what things affect your margins?
Mm-hmm.
What inning are you in your margin cycle? Because it's really important. My favorite company is a company that's growing revenue, maybe not super fast. It's okay to find those, of course, but growing margins slowly over time because they got multiple good quarters.
Right.
And then they're the very early stages of a margin cycle. So if you find me a company that is selling is creating at maybe 3 or 4%, pre-tax margins or EBITDA margins, but I feel maybe they can go 10%, 15% margins. That's a fantastic runway of growth. So you can grow revenue by only 10%, but get earnings growing like multiples of that.
So I have a really great question for you because this is something that, to me, I look at that a lot, and I'm constantly stressing this to people that, it's one thing to have a company that has a whole bunch of revenue coming in the door, right? Lots of companies, a lot of the tech companies that you look at nowadays have that, but what they're missing is the actual profitability portion of it. So when you mention the potential for earnings to grow over time, the actual margin, how do you assess what their margins should be? Do you look at mainly, I'm sure comparatives is a very important thing to compare one company to the next, but outside of that, how do you look at okay, maybe they're not going to reach, maybe Square is not ever going to have the same margins as PayPal, but I think that Square could get to this amount. How do you assess that?
Yeah, I mean, look, there's different ways you can do this. So the first thing is, of course, you can look at the industry.
Mm-hmm.
And what are some of the other companies looking like in the margin picture? And then when you're doing that, you have to try and understand more about the product mix of the company versus the competitors. What tier of product quality are they in that spectrum? Mm-hmm. But generally, you look at your competitors like, all right, that's interesting. Maybe look at the past history of the margin profile of the company. So if they're selling, let's say they're at 5% EBITDA margins right now, and at one point in their life they were at 10%.
Mm-hmm.
Okay, fine. Well, through your interview process, you try and figure out, why did they come to 5%?
Right.
Do they have potential to go 10%? So comparing to the industry, comparing to the history, are two really great things. And then this is a really interesting. So important for some companies. Where are you? I would ask them, where are you in your product cycle? So if you had a product on the market for years, and you haven't had a new product for a while, those margins might start coming down.
Right, because the competition's coming in and it's suppressing your,
Sure, so it's natural. It could be natural maybe, and so as new products come in, that might start giving might either give a boost in margins or at least secure margins where they're at.
So in a lot of ways, you're kind of using the whole Porter's 5 forces type of mentality as well, and looking at what type of power they have with the suppliers and with the buyers and things like that, and trying to tie all of that in with also an understanding of just the comparatives and all these other things.
What their market, what their market position is. I found a company just a few days ago, a few weeks ago. They have they're 100% recurring revenue. They know they have a very small piece of the market, mm-hmm. 0 to 1, right? Mm-hmm. But they own it. Mm-hmm. And that's just great, and it's just that no one really knows about the company, but those are really small, interesting areas to look at, and so there are some industries where margins might not be as important. Investors are willing to pay up for companies mm-hmm. if they have a lot of recurring revenue, mm-hmm. as opposed to lumpy revenue. Mm-hmm. So you're clicking that, every month getting revenue from your customer base. It offers certainty. Or if you have annual contracts that continue to renew, those kind of companies will get high valuations often, even though they're not making money.
Yeah, this is great, man. This is all really good, deep stuff that I wanted to get into, because there's a lot of stuff on YouTube with investors that are in the business, but it's just it's general stuff. It's stuff that you and I wouldn't look at it and really learn something from it at the level that we're at now. Right, you might get a little bit from it, but you want to know the nitty gritty details. You want to really know the sauce, and they don't really want to give that to you. So it's good that you're willing to take some time and discuss that. Man, I think just a few other questions. I'm not going to take too much more of your time. I really seriously appreciate this, man. This is going to be awesome when everybody sees this. They're going to love it.